$5,400 gold, $115 silver, and an S&P 500 screaming towards $7,000 while the world around it burns. If you think the markets make sense anymore, you're not paying attention. The inflation tsunami we warned you about hasn't just arrived. It has officially breached the seawalls of the global economy. While the mainstream media talks about a soft landing, the reality is a brutal, calculated transition into a new era of devalued paper and soaring hard assets. Today, we are exposing the shadow pivot of 2026, the moment the Federal Reserve lost control and China's $800 billion debt dump turned the US dollar into a ticking time bomb. If you have money in a bank, a 401k, or even under your mattress, the next 10 minutes will determine whether you survive this collapse or lose everything. Welcome to the year of the Great Reset. The anomaly we are seeing in January 2026 is something that has never happened in financial history. Usually, when gold hits record highs, the stock market struggles. But right now, we are seeing a crack-up boom. The S&P 500 is hitting 7,000, not because the companies are more profitable, but because the currency they are measured in is dying. This is the inflation tsunami in its purest form. When the value of the dollar drops by 20% in a single quarter, an index hitting record highs is actually a sign of desperation, not prosperity. People are fleeing the dollar and dumping their cash into anything they can find: stocks, real estate, and most importantly, the ultimate God's money, gold and silver. Visual? Flash the DXY versus gold graph. Sound? Deep sub-bass rumble. Fast zoom on the $5,400 gold price ticker. To understand how we got to $5,400 in gold, you have to look at the deadly trinity of 2026: unpayable debt, energy wars, and the final de-dollarization. For years, the U.S. government ignored the warnings, pushing the national debt past $38 trillion. But in January 2026, the math finally broke. The interest payments on that debt now exceed $1.5 trillion a year. The U.S. is now officially borrowing money just to pay the interest on the money it already borrowed. This is the debt spiral that China has been waiting for. By dumping $800 billion in treasuries, Beijing didn't just sell an asset, they triggered a margin call on the United States of America. As the supply of dollars floods the global market, the purchasing power of your savings is being deleted in real time. This is why silver has exploded to $115. Silver is the Achilles heel of the financial system. It is both a monetary metal and a critical industrial component for the 15th Five-Year Plan's tech revolution. China's massive solar and EV infrastructure has created a physical shortage of silver that the COMEX and LBMA vaults can no longer hide. The paper-to-silver ratio has collapsed. For every 1 ounce of physical silver, there were 400 paper claims. In early 2026, those paper claims were called in, and the price went vertical. That's visual: cinematic shots of silver vaults and solar panel gigafactories. Sound: high-pitched metallic ring, zoom in on a silver bullion bar. But the real shock is the S&P 7,000. Why is the stock market surging while the economy feels like a recession? Because of liquidity injections. To prevent a total banking collapse following China's debt dump, the Federal Reserve has been forced into a shadow QE. They are printing trillions behind the scenes to buy the bonds that no one else wants. This wall of new money has nowhere to go but the top 7 tech stocks and the broad market indices. It is a melt-up. It feels like you're winning because your portfolio is green. But when you go to buy a gallon of milk or a tank of gas, you realize that $100 buys what $40 used to buy just 2 years ago. You aren't getting richer. You're just losing your wealth slower than the person holding cash. Pattern interrupt, shocking fact pop-up. Sound: vine thud. Text on screen. In 2026, the US dollar has lost 18% of its domestic purchasing power in just 90 days. The inflation tsunami is being amplified by the total collapse of the petrodollar. As we move through January 2026, the headlines are dominated by the new BRICS Plus settlement system. Saudi Arabia has officially moved 50% of its trade into the gold-backed unit. This has created a reflux of dollars. Trillions of dollars that were once held as reserves by foreign central banks are now being sent back to the US in exchange for real assets: land, gold, and equity. Behind this chaos is a calculated move by the global East. While the US is trapped in a domestic political crisis and an inflation spiral, China has completed its golden fortress. By 2026, Beijing has successfully moved its entire economy onto a blockchain-based gold-settled ledger. They don't care if the S&P goes to 7,000 or 10,000 because they own the physical commodities that the West needs to survive. They own the rare earth minerals, they own the battery tech, and they own the physical gold. They have traded a bankrupt currency for the keys to the future. Visual: diagram showing the flow of wealth. Sound: cracking glass effect on the USD symbol. The shock of 2026 is that the inflation tsunami is not an accident, it's a weapon. It is being used to wipe out the debt of the elite while destroying the savings of the middle class. If you owe $500,000 on a house and inflation hits 50%, your debt becomes easier to pay, but only if your wages keep up, which they won't. This is the great wealth transfer. The S&P 7000 is the bait and the tsunami is the hook. As the dollar's reserve status fades, the US is being forced to internalize all the inflation it has exported to the rest of the world for the last 50 years. This is part one of the collapse, the melt-up phase. But what happens when the liquidity runs out? What happens when the $5,400 gold becomes the only accepted currency for international energy? In part two, we will look at the motor silver squeeze that broke the COMEX and the secret BRICS meeting that officially ended the $S reign. The tsunami has just hit the shore. The high ground is no longer paper, it is physical. While the headlines are screaming about $5,400 gold, the real execution is happening in a market that most investors ignore until it's too late: silver. In January 2026, the unthinkable happened. The COMEX and London bullion vaults, the places where the world silver is supposedly stored, reported a catastrophic drain. For decades, the silver market was controlled by paper contracts. For every 1 ounce of real physical silver, there were over 400 paper claims. It was a massive game of musical chairs, but this morning, the music stopped. Visual, flash a chart showing the massive gap between paper claims and real silver. Sound, high-pitched digital alarm, zoom in on the default warning. The silver blasts through 115. We are witnessing the first ever physical delivery default in modern history. Industrial giants from the EV and solar sectors, realizing that China's 15th five-year plan has locked down global supply, have bypassed the paper markets and demanded physical delivery of their silver. The vaults are dry. The inflation tsunami has turned into a physical squeeze that no amount of money printing can fix. You can't print silver, you have to mine it. And right now, the world is in its 6th consecutive year of a massive supply deficit. Pattern interrupt. Shocking fact. Pop-up. Sound? Vine thud. Text on screen. Silver is up 240% in the last 12 months, outperforming every major tech stock. But why 115 and why now? The trigger was a secret BRICS Plus directive issued in late 2025, which mandated that all strategic minerals, including silver, must be settled in the unit. This is the secret gold-backed currency we've been tracking. The unit is not a digital promise. It is a hybrid instrument backed 40% by physical gold. By linking their trade to the unit, the Eastern Bloc has effectively remonetized silver. In the streets of Shanghai and Dubai, silver is no longer just an industrial metal. It is being used as a high-velocity reserve. Visual, animated map showing silver moving from London and NY to Asia. Sound, heavy clanking of metal crates. Fast zoom out to show the global shortage. While the S&P 7000 gives the illusion of wealth, the COMEX default is the reality of insolvency. The big banks that have spent years shorting silver to keep the price suppressed are now facing billions in margin calls. They are being forced to sell their blue-chip stocks to cover their losing silver positions. This is the shadow crash. Underneath the surface of the record-breaking stock market, the plumbing of the financial system is bursting. The inflation tsunami is washing away the paper lies, leaving only the hard physical truth. The most terrifying part of this 2026 reality is the energy silver-gold nexus. As the dollar loses its status, oil-producing nations are demanding more than just paper yuan. They want the unit. To settle these massive energy trades, billions of dollars are being converted into gold and silver every single day. This is why the gold-to-silver ratio, which was 80.1 just a few years ago, has collapsed to 30. 1, silver is moving faster than gold because it is the poor man S gold and the rich man S industrial fuel. Visual, cinematic montage of solar farms, nuclear reactors, and silver coins. Sound, fast, rhythmic electronic beat. If you are holding paper silver or an unallocated account at a bank, you are finding out today that you own nothing. As the tsunami hits, the banks are invoking force majeure clauses, telling investors they will be settled in cash, worthless, inflated dollars, instead of the physical metal they were promised. This is the great theft. The $159 price tag is just the beginning. In a world where the COMEX has defaulted, the price of silver is no longer discovered. It is negotiated. Visual. Diagram showing the collapse of paper contracts. Sound, cracking glass, fade to black. We are moving into the final phase. The $5,400 gold and $150 silver are the warning shots. The S&P 7000 is the final exit ramp. In part 3, we will reveal the 15th five-year plan S final climax, and exactly what happens to your bank account when the Federal Reserve is forced to choose between saving the dollar or saving the stock market. Spoiler, they can't do both. As the global markets enter the final phase of the 2026 meltdown, the smoke is beginning to clear, revealing a new world order that was hidden in plain sight. The $5,400 gold and $115 silver are no longer just numbers on a screen. They are the new anchors of global power. But while everyone is staring at the shiny metals, the real execution is happening in the background of your bank account. The S&P 7000 wasn't a sign of growth. It was a liquidity trap. And today, as the inflation tsunami reaches its peak, the trap is being sprung. Visual. Flash a chart showing S&P at $7,000 versus a crumbling GDP line. Sound, high-tech glitch noise, fast zoom on the liquidity trap label. For years, the 15th five-year plan of China was mocked by Western analysts as overambitious. But as of January 2026, it has become the blueprint for the global economy. By dumping $800 billion in U.S. debt and pivoting into new quality productive forces, Beijing has achieved something the West thought was impossible: absolute resource dominance. While the Federal Reserve was busy printing digital dollars to keep the S&P 500 at 7,000, China was busy buying every ounce of physical silver, cobalt, and lithium they could find. They didn't just build factories, they built a monopoly on the future. The shock of 2026 is the realization that wealth has been redefined. In the old world, wealth was a high stock portfolio. In the new world, wealth is physical access. As the dollar loses its reserve status, the U.S. can no longer simply outbid other nations for resources. If China owns the silver mines and the battery patents, they dictate the terms of your life. This is why silver hit 115. It's the price of admission to the 21st century, and the West is currently standing outside with a pocketful of devalued paper. Pattern interrupt. Shocking fact. Pop-up. Sound, vine thud. Text on screen. In 2026, for the first time in history, China's R&D spending has surpassed the entire EU and US combined. But here is the most terrifying part of the inflation tsunami: the programmable reset. To save the economy from the very hyperinflation they created, the Federal Reserve and central banks across the West are preparing to launch the CBDC, central bank digital currency. They will tell you it's for your safety. They will tell you it's to stop the S&P from crashing to zero. But the reality is that this new digital dollar will be programmable. Visual. Cinematic shots of digital codes flowing over a map of the US. Sound. Eerie, low-frequency digital hum. Zoom in on a smartphone screen showing transaction denied. Imagine a world where your money has an expiration date, or where you can't buy gas because your carbon footprint is too high. This is the social credit reset that China has already perfected, and it's coming to the West as a solution to the inflation they caused. The S&P 7000 was the final distraction to keep the middle class invested in the system while the exits were being boarded up. While you were cheering for your 401k to hit new highs, the very nature of private property was being deleted. The inflation tsunami is the great leveler. It wipes out the debt of the governments, but it also wipes out the savings of the people. As $5,400 gold becomes the international standard for trade between the BRICS plus nations, the average citizen is left holding a digital token that the government can switch off at any moment. This is why the flight to physical gold and silver is not just a trade, it is an act of resistance. It is the only way to stay outside the programmable trap. Visual, split screen. Left, chaotic bank runs and protesting crowds. Right, peaceful, high-tech, autonomous cities in the east. Rapid zoom out. The final endgame of the 15th five-year plan is the total realignment. China has already moved its population onto a gold-backed digital ledger that rewards productive labor, rather than financial speculation. They are prepared for the collapse of the dollar because they are the ones who pulled the plug. On this Black Monday of 2026, as the inflation tsunami washes away the last remnants of the old financial order, you have to ask yourself, are you holding the paper that is drowning, or are you holding the gold that is the lifeboat? The shock is over. The reality is here. The S&P 7000 was the peak of the mountain before the fall. The $115 silver was the warning shot. The $5,400 gold is the new king. The world you knew is gone, and the new one belongs to the dragon. Visual. Final shot of a golden sun rising over a futuristic Beijing skyline, while the U.S. Capitol building fades into a digital mist. Sound. Loud, final cinematic boom. Screen fades to black. The tsunami has passed. The reset has begun. Where do you stand?